Good afternoon, folks. Joe Baker with Trade Pilot Pro. I'm going to go over today's market action as well as tomorrow's areas of breakout and breakdowns in the S&P Futures. If you would be so kind as to watch last night's video and the prior night's videos as well, I have been maintaining that we have been in a downtrend. And this lets me know, based on my fork ranges, my channels, and just the overall market action, that this market is heading downward. I've been maintaining that the whole way through. And here we go again. We're still in this downtrend. I just want to show you that this is the lower parallel of this large fork area up at the 1313 area, which is at 1331. I'm sorry, 1231. Right now we are trading at 1231.25, and we are holding this level. A break below this level, and I think we'll see some pretty heavy liquidation like we saw this afternoon. And if we get down to this 1200 area and we take this out, I mentioned this before weeks ago, that this whole pattern here could come back up, retrace, and then head right back down under 1100 area. Now, let's not get ahead of ourselves. We have to obviously take out this 1200 on a closing basis. Okay, so we still have about 30 points to go, but it's getting pretty, it's getting pretty hairy at this juncture. That liquidation this afternoon was fast and furious. This is what happens when I've mentioned that the markets will go in these ranges, and it does this actually intraday, where the markets go from a period of consolidation to expansion. And when markets consolidate, they build pressure, they build cause. And you're just building energy, and more energy gets built, and then you bust out. You have to understand, the market is just made up of me and all you guys out there, institutions, traders, all the emotion built up behind. And when you just continue to go sideways, as we did throughout the entire summer, this is a result of it. Either break up or break down, but this is a result of it, where you get these, markets consolidate to expand. We actually have an indicator we use on an intraday basis called the CONX, and it shows us when the market actually consolidates, and then it expands. That's where we get the CONX. So at any rate, we are still in a downtrend. This 31 level is fairly important to hold. We are here now. Maybe we'll get some sort of a bounce tomorrow. Who knows what can happen in this market? As we know, it can and will do anything. And as I said before, the market is really good at taking the most amount of money out of the most amount of people in the shortest amount of time. I'm going to shoot over to the daily chart. Okay, I hope you can see this. What happens is we have a double fork here, and I know this looks kind of crazy, but let me explain it to you. This 1275.75 is an area that was hit once, twice, 3 times on a daily. Couldn't get above it. That would have been this upper parallel to take this out to get into the uptrend on a daily now. Okay, we took out this median, came back down. This is an energy point. Okay, this is a lower parallel on 2. Okay, so 2 formations within a daily are printing right now. So this would be considered an energy point, and this is at 1215.75. So if we do take out the 31, we've got to get a bounce, and we've got to hold the 1215.75. Now we can go down below it and close up above it and get back up in this range. And then we can get inside this range here and go sideways for a little bit. Sideways to down, but at least sideways. And then we'd be between the 75 and 15 range, and we can consolidate again. All right, now that would be the best case scenario, as opposed to just an outright, I don't want to call it collapse, but just an outright downtrend day after day after day. You have to be, if you look at this chart, I mean, it is chopped, chunked all over. And I'd mentioned before, for you guys to watch the bonds, I've mentioned it over and over again in these prior videos. I think it's, not to waste your time, but if you go over the prior videos, as the things I'm mentioning and seeing throughout these days, I think it would help you understand the markets more. I said, just watch these bonds. Something is up. I mentioned, weeks ago that I assumed it would be Fannie and Freddie. Having a finance background and owning a finance company for 10 years, I'm very well aware of the paper that's out there, and I'm very well aware of what's going on. I know 90% of it's junk and nobody can sell it. So obviously there's going to be a big issue, and the bonds were telling us that since they topped out at 4.11 on the 10-year and they started heading downward, all the while the market was going sideways, the bond market was heading downward, downward, downward. I mean, I'm talking the yields, so the bonds were rallying, showing that fear was placed in the market. And I had mentioned this even when it was at 3.85, and I'd said, people are taking the 3.85 yield because they can't get that in the market. You have to look at that in perspective as a macro view. Right now, I believe we closed out at 3.56. We haven't been here since, I believe, July of '03. Last time before that was like 1945. So, at any rate, those are just the macro things I look at. I did want to mention that we do have an energy point at 12.1575. This is where two lower parallels come together as an energy point. We've got to stay in here, folks, okay? Or we're definitely heading down to retest that 1200 area. And as I said to you before, again, in prior videos, been in cash for a long time until this weekly turns up. I've got to believe that the market is heading in the downward direction. Okay, hold on one second while I get my daily levels. All right, line in the sand, 1232.50. Looking for 1234.75 to the breakout. Maybe we'll get it, maybe we won't. 1238.25, I'll be looking for above that. 1241.50, 1245, 1248 and a quarter. Underneath 1232.50, we've got 1229.50, 1224.50. Break down 1221.25, 1217.50, 1212.50, 1207.50 for our ultimate target. Remember, you can go to the blog. You can sign up to have these emailed to you every single night. Actually, I email these before I even put these videos out. So you have them early. You can print them, put them next to your desk. Like I say, watch them intraday. It does help, and I appreciate all of you that have signed up. I've had a tremendous amount of you signing up, and I appreciate that. Having the faith in me. I do work hard on these levels. I do them by hand, and it takes me a little bit every night, but I feel that they're definitely worth it. And as you all that known, I've been pretty spot on these levels here. So, like I said, just appreciate you going to sign up. Lets me know that you're appreciating the work that I'm doing. And again, guys, please be careful in this market. Snapback rallies, okay, as we know, in bear markets can be furious, and this is what we've seen. So they can be tricky. We think it's all over. Whoa, we're up 200, 300 points. It's all over now. We're in the uptrend, and then it's smack down again. So you have to remember, again, as we get stretched, the market gets like a rubber band, gets to the downside, gets everybody overcrowded, as I've mentioned before in the videos. And once everybody gets overcrowded, the market snaps back and, whacks you in the head. So, again, be careful when trading this type of market. When we have, obviously the snapback rally the other day on the takeout of Fannie and Freddie, and then it just smacked you right back down. And if you weren't nimble and quick, you got run over. So I just, again, keep cautioning over and over again. Keep your stops, know your levels, and good trading, folks. I will be talking to you tomorrow.